What if I told you the world is not running out of money, but it is running out of dollars? Not because money disappeared, not because economies suddenly stopped working, but because the system itself is built in a way that constantly demands more dollars. And right now, that demand is rising, fast. To understand this, we need to go back to a simple truth. The US dollar is not just a currency, it is the backbone of the global financial system. Most international trade is done in dollars. Oil is priced in dollars, gas is priced in dollars. Commodities, from metals to food, are traded in dollars. Even when two countries have nothing to do with the United States, they still use the dollar, because it is trusted, liquid, and accepted everywhere. But the story doesn't stop there. There is something even more important: debt. A massive portion of global debt is denominated in US dollars. Governments borrow in dollars, corporations borrow in dollars, banks operate in dollars. This means one thing: if you borrow in dollars, you must repay in dollars, no matter where you are in the world. And this is where the problem begins. As long as dollars are easy to access, everything works fine. Markets are stable, growth continues, debt is manageable. But when conditions change, the entire system starts to tighten. And that's exactly what we are seeing today. Energy prices are rising, interest rates are going up. Inflation is forcing central banks to tighten monetary policy. And suddenly, everyone needs more dollars. Countries need dollars to pay for energy imports. Companies need dollars to service their debt. Banks need dollars to stay liquid. Demand rises across the entire system. But here's the critical part: dollars are not evenly distributed around the world. They are concentrated, controlled, largely by the US financial system. So when global demand spikes, there isn't enough supply to meet it instantly. And that creates stress, a global dollar shortage. So what happens next? When people need dollars, they start selling. They sell stocks, they sell bonds, they sell gold, they sell crypto. Anything that can be converted into dollars. Because when debt is due, nothing else matters. Cash flow doesn't matter, valuations don't matter, narratives don't matter. Only one thing matters: do you have dollars? This is where a powerful idea comes in: the dollar milkshake theory. Imagine the global economy as a giant milkshake, full of liquidity, different currencies, different assets, different markets. Now imagine a straw placed into that system. That straw is the United States. When pressure builds, liquidity gets pulled towards the dollar from all over the world. This is why, during times of global stress, the dollar doesn't weaken, it strengthens. Even if the crisis does not start in the US, because everyone is chasing the same thing: dollars. But this creates a dangerous feedback loop. As the dollar rises, other currencies fall. As currencies fall, debt becomes more expensive, because that debt is in dollars. So countries and companies have to work harder just to stay afloat. And that pressure spreads from one country to another, from one market to another. Slowly at first, then all at once. We've seen this pattern before. In emerging market crises, in currency collapses, in global financial shocks. It always begins with a shortage of dollars. But today, the situation is bigger, because the world is more interconnected than ever. More trade, more debt, more leverage, more dependency. Which means when something breaks, it doesn't stay local, it becomes global. Now think about this. If everyone needs dollars at the same time and there aren't enough, what happens next? Something has to give. This doesn't mean a sudden crash tomorrow. It doesn't mean markets collapse overnight, but it does mean pressure is building. Under the surface, markets may look calm, prices may seem stable, but behind the scenes, a silent battle for liquidity is happening. And most people don't see it, because they focus on headlines, stock prices, interest rates, daily news. But real risk comes from the structure underneath the system. And right now, that structure is under stress. A global system built on debt, running on dollars, facing a shortage of both. So what does this mean for you? It doesn't mean panic. It doesn't mean fear. But it does mean awareness. Because those who understand how the system works can see the shifts before they become obvious. They don't react late, they prepare early. Because in finance, the biggest changes don't happen loudly. They happen quietly, slowly, until suddenly everyone feels them. So next time you hear about markets moving, currencies shifting, or interest rates rising, remember this: it's not just about money, it's about access to the most important currency in the world. And right now, that access is getting tighter.